Mid-caps clock good gains even as the frontline indices are off lows. FMCG and metals gain, but consumer durables and financials drag.
Marico clocks in a good quarter with volume growth of 5% on the back of a strong pickup in rural demand. Even as urban offtake wanes, the FMCG major expects price and volume growth to pick up going forward. The stock jumps.
Swiggy, which is set to launch its near 11,000 crore rupee IPO next week, expects the quick commerce business to drive growth and food delivery to drive margins going forward. The food delivery to QCom major will invest in dark stores and repay debt with the fresh issue proceeds.
Oil marketing companies have hiked dealer margins ahead of Diwali while also revising freight charges within zones across the country to equalize prices. The adjustments, according to former HPCL CMD MK Surana, should not significantly impact OMC bottom lines.
Gold hits a new high as US elections and global geopolitical uncertainties spur safe haven buying in India. The yellow metal trades at a premium as the trade sees sales surpassing the previous festive season tally.
Good afternoon. You're watching Halftime Report here on CNBC TV18. Wishing all our viewers festive greetings on the occasion of Diwali. I'm Hormas Fatakia. With me is Mangalam Malu. Well, Mangalam, good afternoon. It seems after the move that we saw yesterday on the Nifty Bank, I guess it was celebrating Diwali yesterday, we're seeing some bit of profit booking today, but the broader markets are doing very well.
The broader markets are doing quite well. The FMCG stocks are doing quite well. The outlook isn't as grim as what, last week would have us believe. But what's interesting, Hormas, is that today is also known as Choti Diwali, right? So there is Chota Pataka, which is doing extremely well in the markets. Here, the broader markets, all the small cap stocks, a lot of these, mid cap, small cap indices doing extremely well. They're firing up. 2,000 stocks advancing for just about 400 stocks, which are declining. So that looks good. The question is, does Chota Pataka burst today and then you have a big Pataka bursting tomorrow? The last couple of days are something to go by. Maybe, we've recovered from the lows. So second half of trade will be extremely interesting given the Nifty Bank expiry that plays out too. But let's talk about earnings and a lot of them on our radar. Rainbow Children's Medicare, the first management on the show. The company has reported a healthy set of second quarter numbers. The occupancy improved, but the average revenue per occupied bed declined. Ramesh Kancharla, who's the chairman and managing director of the company, joins in. Thanks a lot, Mr. Kancharla, for joining in. Always a pleasure speaking with you. Wish you, your team, and your families, all of them, a very, very happy season's greetings from our team here at CNBC TV18. It's a healthy performance that you've reported in the second quarter. However, the third quarter, because of festive reasons, is typically slower in a business like yours. If you could give us a sense, from the halfway mark to the next half, what kind of improvement are you expecting in both average revenues per occupied bed and the occupancy?
Thank you, Mangalam, and wish you happy Diwali and the CNBC team. So you just to the occasion today. So the second quarter has gone very well, as I guided earlier the whatever kind of forecasting. I think we are halfway through. I think it's looking good, and as we move forward, I think we continue to do well in the third and fourth quarters. So we look at probably kind of a halfway. Probably second half will be a little more better than first half. So we achieve our whatever is our budgeted numbers and the street expectations to the year end. This is how we look at it. I think our business is actually pretty good this year. I mean, compared to the last year has been a kind of a slack. There was no season. So this year, this overall, I mean, 360 degrees business is improved. When you've seen the lot of, when you look at occupancy is about 59%, which is the highest ever occupancy, and the lots of seasonal business. Whenever there is a seasonal business is very high, and obviously the RPOPs will get settles to kind of a lower because of the low ticket bills, most of them. So we had about 32% of the kind of the pediatric business. That's why the RPOPs are lowered. And as we move forward, I think that quarter three and quarter four, towards quarter four, RPOPs will improve to the normal.
If you could just, building on what you earlier said, Mr. Kancharla, first half 20% revenue growth. You said second half will be slightly better. So what do you end this year with on the top line? Occupancies at 59% were high because of seasonal business. So where do they settle at by the end of this year? And the RPOPs, you said will move back to normal range. What is that normal range that we're looking at, say, in March 2025 when we speak? Just these three numbers.
Revenue growth? We had
go ahead.
54 1,000 RPOP earlier year. I think we'll probably move towards 54,000. The occupancies may be kind of, may stay around the same, may lower a little bit, but the quality of business will improve as we move forward to the third and fourth quarters. So that's what we expect it. And I wouldn't think that, the growth, the occupancy grows further. And this is the problem, the peakest occupancy, what we would expect. When you look at our mature hospitals, have done highest ever occupancies, which is beyond our kind of guidance, 68%. Even the maturing hospital, 43%. That's because of the lots of footfalls, lot of seasonal illness, which is amounting to this kind of occupancies. But the business gets better, the payer mix gets better as we move to the third quarter and fourth quarter. So that's why I'm expecting it to be kind of a revenue will be slightly more than higher than the first half. So overall, I think we'll probably end up in around the 1,550 crores, around that figure.
Mr. Kanchala, good afternoon. Festive greetings to you, your team and your family from all of us here at CNBC TV18. I wanted to talk to you about your margins, sir. You mentioned your margins have been flat on a year-on-year basis, been 35% this time around. They were 35% last year, but sequentially they have improved. Do you see those margins remaining at that trend going forward, or do you see some near-term volatility because of the fact that there is some additional cost for your newer units?
I think that if you go back and see the first quarter, the margins were kind of compressed because of the addition of the new beds. And as kind of almost kind of in the second quarter, the first half of the year, we come closer to the last year's margins. I think that we are kind of clocking at the highest ever margins. I don't think the margins would improve, but year on year, we're adding beds. As long as we keep our margins around kind of a pre-Ind AS EBITDA about 27%, we will kind of, that's what we expect normally. We do see a little bit of a couple of percentage of higher EBITDAs in the seasonal quarters. The overall, our guidance has always been about 25 to 27% of the EBITDAs on the pre-Ind AS basis. The post-Ind AS all depends on how much rental is there.
All right. Let's talk about expansion as well. What are the new hospitals which are coming on stream over the next 1 year? How much would that increase your revenues by? And the other part is that you were also looking at some sort of inorganic opportunities, right? Have you closed in on something? Any geography in particular?
Yeah, we haven't actually. We've been in discussions. I think it's too early to talk about acquisitions. However, we are open about it. We keep actually looking at those opportunities, but when appropriate times, I would definitely discuss with you. In terms of the new hospitals, in next 1 year time, we're going to have about 3 hospitals opened up. One is in Rajahmundry, is of 100 beds. In the 2 in Bangalore city, which is one is Hennur, as well as kind of Electronic City. These are about probably about 240 beds we're going to get open in next 1 year.
Mr. Kanchala, what about diagnostics, sir? What is the kind of potential that you are anticipating from that business going forward, sir?
I think our diagnostics is very specific to the children's. Now, we are not looking at anything expanding the diagnostic space within the hospitals. However, as a premier children's hospital, so we always keep adding more and more to our kitty, whatever the kind of specialty diagnostics. So we become a kind of independent. If you look at our balance sheet, that 1% of the revenue goes out to kind of outsourcing diagnostics. We are trying to capture more and more into our business.
All right. Just a final question before we let you go. This child development center that you opened in Hyderabad, what exactly is the addressable market expectation? Are we expecting some more of these CDCs coming up in the very near future?
I think that at least in the population, about at least 1.5 to 2% of children requires some degree of kind of either behavioral or psychological or even a kind of a rehabilitation needs. That's significant. That's quite a lot. I think we do not have really specific estimates, but the volumes, what is there in the community is very significant. At the moment, they're all going to kind of independent individuals. What we are trying to do is we're consolidating all the therapies for whatever is required for the neuromotor disabilities, as well as kind of a behavioral spectrum, especially things like attention deficit disorders and autism. These are significantly going up. I think this is the need of the hour to address these children and the parents.
Fair point, Mr. Kancharla. Thank you so much for joining in. Wish you good luck for the second half of the financial year and festive greetings once again
Thank
to
you and happy
the
Diwali.
management. Thank you, sir. That is the management of Rainbow Children Medicare. Time for a short break. Up next, we connect with the management of Green Panel Industries to discuss their quarter numbers and the road ahead. Stay tuned. We'll be right back. Back with us here on Halftime Report. Green Panel Industries is the next management on the show. It reported a weak quarter because MDF realizations hurt its overall performance. The revenues were down and it trickled down to the profitability as well. We have V. Venkatramani, the CFO of Green Panel Industries, joining in. Mr. Venkatramani, good afternoon. Thank you so much for joining in, and festive greetings to you, your family and your team as well from CNBC TV18. Well, to talk about the quarter gone by, your revenues were down. Your EBITDA has almost halved from previous year. The net profit is also down almost 55%. What would you attribute that to other than the MDF volumes? And when do you expect the situation to improve going forward?
Yeah, good afternoon and happy Diwali to your team and all the viewers. Yeah, it's been a tough and challenging first half of the year, but we are expecting things to be significantly better in the second half and the next financial year. So if you look at the MDF side, capacities have grown by about 60% over the last 2 years. And, a lot of price action has happened from newer capacities, which has also forced us to take price cuts. And at times, it's also impacted our volumes because we try to defer price cuts to the extent possible. So we have focused on things that we can control. There are a lot of variables that we can't control right now. Price action is dictated by competitors. Wood prices have been rising continuously. So we have been focusing on variables which we can control, which are the receivables and the cash flows. But as I stated, we expect a significantly improved performance in the second half, a growth of about 35% in MDF volumes as compared to the first half, and volume growth of around 30% in the plywood segment as compared to the first half.
All right, so 35% volume growth as compared to the first half, 30% volume growth in the plywood business as compared to the first half. For the full year, what does that equate to, Mr. Venkatramani, when it comes to revenue and volume comparison over FY24, which itself wasn't one of the best years given the weakness that we've seen in the industry?
That's correct. So when I said a 35% volume growth in the MDF segment, I was referring to the domestic segment. So we did volumes of around 184,000 cubic meters in the first half. So we are targeting about 246,000 cubic meters in the second half. Exports, we did volumes of around 35,000 in the first half, so targeting similar volumes in the second half. And in the plywood segment, we did volumes of around 28 lakh square meters in the first half, targeting about 35 lakh square meters in the second half. So overall, we should be looking at a top line of close to 1,600 crores this year.
Okay, and what's your view on realizations? By when do they bottom out?
I think realizations have bottomed out, because we have seen competitors announcing price increases, towards the end of October, which is expected to be effective from the second week of November. So I think, yes, realizations have bottomed out, and Possibly not any significant increases this year. We could see increases in the range of 3 to 5% in the second half of this year, but we expect better realizations in the next year.
Mr. Venkatramani, as a market leader in the MDF space, as a number 2 player in the plywood space, you mentioned you are dealing with things that are in your control. So what are the steps that you are taking from your end to improve the situation, considering the guidance that you have given for the second half?
Yeah, we have been concentrating on the cost side, integrating the marketing team. We had separate teams for plywood and MDF. So we have integrated the team into a single team, which is looking after both the product segments. So that also means a larger team to focus on both the segments and better coordination amongst the team members. And we have reduced the number of physical marketing officers. We had 17 offices. So I think by the end of this quarter, we will be down to about 5 or 6 marketing offices across the country, because we felt that you don't really require office spaces for the sales team. They are better placed working in the markets with the dealers and the retailers.
All right, that's fair. You are undertaking a lot of steps to optimize the entire situation right now, as it were, from the cost end. Just a two-part question as you speak about this. The first part is you were focusing on value added as a part of your domestic volumes as well. How much is that right now? How is that performing? How much is that likely to be? And you've given us a target of 1,600 crore on the top line for this year. What would the margins be given all the things that you're doing and the fact that realizations have now bottomed out?
Okay. So last year, the mix of value-added products in MDF was 50% of the domestic volumes. If you look at the first half, it was about 47% in the first quarter and 54% in the second quarter. We are targeting a mix of value-added products at 65% of domestic volumes by the end of FY27. Of course, when I say 65%, that's based on the existing capacities, not for the new capacity which will be coming online in Q3. And margins, yes, MDF margins have been around 12.5% in the first half. We are targeting about a 15% MDF margin in the second half. And plywood margins, I think, will be continue to be around low single digit for the current financial year.
So what does that do to your overall margin picture, Mr. Venkatramani?
I think we should be looking at EBITDA value of around 220 crores for the full year.
All right, we take that point. Thank you so much for joining in, and for you and the industry, we hope that things really do improve, and we see a very good FY26 as compared to some improvement in H2 FY25 and a lot of weakness in the first half of this year as well. Wish you, your team, a very, very happy Diwali and festive greetings, Mr. Venkatramani.
Thank you very much. I reciprocate your greetings.
All right, thank you. With that, we'll step into a short break, and as always, let's give you that programming note. CNBC-TV18 celebrates 25 years of excellence. We invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit. We're bringing together many visionary policymakers like the Finance Minister Nirmala Sitharaman herself. We have the RBI Governor Shaktikanta Das. Then we have industry leaders, HSBC Bank's Hitendra Dave. We have Kotak Mahindra's Uday Kotak and trailblazing startup founders, all of them up for you on your screen. That's where the roadmap for India's next 25 years of global growth and global leadership will be charted. You really don't want to miss this. Welcome back. We're celebrating Diwali here on CNBC TV18. As you can see, about a good time to get in some perspective from the F&O end of things as well. There has been a fair amount of recovery from the lows from the Nifty end of things. Can't say the same for the Nifty Bank, which is still a little below that 52,000 mark after briefly crossing that in today's trading session. The mid caps have done a lot better. So the Nifty has recovered just under the flat line as we speak. The Nifty Bank has curtailed some of its losses, though seeing some supply at the higher levels at around that 52,000 mark. The mid-cap index is where all the strength is. Over 2,000 stocks in the green for just about 400 in the red as we speak. What's interesting is that at many parts of today's trading session, the Nifty Bank went lower. Today's low was 51,733. It did go immediately above that 50-day moving average, the one that it crossed yesterday, as an important support. So that's something that we'll watch out for at the first leg of support. If we were to break that, the second leg comes in not far below at 51,587 on the 100-day moving average itself. So fair amount of support for the Nifty Bank. Though at the upper level, there is supply at the 52,000 mark. Why do I say that? Because it's also expiry for the Nifty Bank. And the 52,000 call has a maximum amount of open interest activity and maximum amount of open interest as well. So maybe upwards of 52,000 to 52,100, there could be case for some supply. Unless we cross that, there would be some short covering. At the lower level, 51,800 to 51,900, where we are right now, we'll see some sort of support. For the Nifty itself, there is a range-bound move which is expected. 24,400 call and 24,400 put. Remember, Hormaz, I spoke about the iron condor which is taking place on the Nifty where, calls and puts of the same strike have been sold. This time around, there is a straddle that they're selling, a call and a put together. 24,400 put has a premium of 50 rupees. 24,400 call has a premium of close to around 150 rupees. So roughly, you pocket close to around, 200 rupees in that. So what this basically means is that the option writers are expecting 24,200 to 24,600 as the broad range for the Nifty. So we'll keep an eye out on this range as it plays out. And the one stock that I'm looking at is Manappuram that may exit F&O ban. A bunch of stocks, remember, will exit F&O ban tomorrow as a new series, as we unwind the series and start a new series day after. But as of now, Manappuram may exit F&O ban today.
A 400-point range, right, for the Nifty ahead of the expiry tomorrow. But the Nifty Bank is going to be the index to watch out for in the second half because it's the monthly expiry for the index there as well. Take a short break here on Halftime Report. Corporate conversations continue on the other side. Saurabh Mittal, the MD and CEO of Greenlam, joins us on the other side. Stay tuned.
You're watching us here on Halftime Report. We're celebrating Diwali in the CNBC-TV18 studio. Let's get you some more numbers. We spoke with a bunch of managements. The next one on our show is Greenlam. Reported a decent set of second quarter numbers, a 12.8% revenue growth. EBITDA grew by about 8%. Given the context, it's been good also because, the veneer business continues to stay a bit positive. Let's get chatting with Saurabh Mittal, the MD and CEO of the company. Saurabh, the first obvious question after festive greetings to you and your team. 14%, 15% revenue growth in the first half of this year. The EBITDA has grown just around 4% with margins at around that 11.3% mark. Where do you see things as they were in the second half of this year? And by the end of this year, what would your revenue growth and your margin look like? Because earlier you had spoken about 20% growth in FY25. First half has fallen a little short.
That's right. So I think on an annualized basis, we should be looking at a 18-20% kind of a top line growth. That's also because one of our plants will get into commercial production in Q3 in this quarter. And we expect some revenues coming in from that plant, which is the particle board plant in Q4. So I think that's on the revenue side. On margins, I think as we scale up, as we do better each quarter, we hope the margin should also keep improving. And you must appreciate that in the first half of the year, versus last year's H1, we've had two new plants which have been capitalized. One plant in Tamil Nadu, the laminates plant of Andhra Pradesh. So we've had higher operating expenses and higher depreciation and higher interest too. And so clearly, I think a fair comparison may not be correct, but it is what it is. So this is where we see things right now.
Saurabh, good afternoon. Festive greetings to you and your team as well.
Thank you.
What about margins, Saurabh? Actually, what about, and would it be fair to say that now that your new plants come on stream from this quarter around, you expect to return back to those 12.5% margin levels by the end of the year? And also share with us your volume growth outlook for the rest of the year as well.
So yes, I think we should be able to return to those margins, or even be better as things go ahead. So I think that's on margin. On the volume growth, H1 in a core category, I think we've done about 10-11% of volume growth. So I think we should be able to maintain a 10-12% plus minus a little bit volume growth in the core category, and we expect to do better across the other verticals too. In H1, I think we've grown in laminates pretty well. We believe we've won market share in both domestic and international markets. The flooring and the veneer business is seeing better traction. Ply is also, at least on the product side, the network side is stabilizing because we're right now still only present in South India. We've added Maharashtra to the expansion in this year. Chipboard plant will come in stream in Q3 of this year. We should start seeing revenues in Q4. So I think over the next few quarters may not necessarily be only H1. I think each of our categories will do better. That's our guess, and that's our hope. And we are working towards building each segment of the company and trying to win in every category, in every market.
From what we've been speaking over the last many quarters and even this one, it seems like it's a story more of FY26 than just FY25, because then you'll have a lot of your plants up and running. The capacity utilization of your plywood business will improve as well, with you having moved to a lot more markets, with the deco veneer margins only improving from here on. So let me probe you a little bit and ask you, what does your revenue in FY26 look like with all the capacities that are likely to come on stream and a lot of these synergies which play out already? So what is the sort of margin expectation for FY26 then?
Hard to give you that number, but I can say with the capacities which will come on stream, including the one in Q3, the utilization will happen over a 2 to 3 year period. So maybe I think FY26 too, we will not see the entire revenue coming into the balance sheet. So I think over FY26, 27, 28, I think over the next 2 to 3 years, we probably will see nearly close to 100% utilization across particle board, plywood, laminates. We're already at a 92% utilization in Q2, and on an H1 basis, I think we're like slightly above 85%. And in laminates, we have possibilities to do brownfield expansion in both our Gujarat factory and Andhra Pradesh factory. So we might need some capacities at some point in laminates, which we'll probably put up in Andhra Pradesh or Gujarat. And we hope to improve the veneer flooring door business too. So I think the entire story will pan out of what we've done now, maybe over FY28. So 26 to 28, I think those 2 to 3 years, we probably will see, hopefully things kind of shaping up quite nicely, for the company and, for all those stakeholders.
I remember that you had said that the entire capacity that is being added will amount to around 4,000 crores in terms of revenue at 100% utilization. You still hold on to that, right?
Yeah, absolutely. Well, that's correct. Yes.
So 4,000 crores by FY28 on your existing capacity.
I'm saying, 2 to 3 years, it's what, how we see things. Yes. So maybe probably around that time, actually.
Saurabh, your veneer business turned a bit positive this time around. Do you see this now as a sustained trend of profitability going around? And what do you see your peak margins in this business, and by when?
Yes, we do think that this will be sustainable. And like I said, in the flooring and door business, we are seeing decent traction with several real estate projects coming into fit outs and interiors, to be done in those projects. And steady state margin, my sense would be more like a 10-12% kind of a thing, as we move ahead.
And by when?
Well, our endeavor is to do it the earliest, but clearly I think we are, if you see the losses have reduced, they also reduced gradually over a quarter. And last quarter, overall, all the 3 businesses combined, they were a bit positive. I hope this only keeps getting better as we move ahead.
All right, just a quick final question before we let you go. On your debt, you have almost 1,000 crores of debt, which you've taken on account of the capex that you're doing. But you haven't lined up any further capex apart from a possibility of something being increased in laminates. So do we expect the debt to have peaked at current levels? What is your debt reduction plan as things ramp up? That's point number 1. And the second one, working capital days. You've managed well with around that 40 days sort of number. Close to 59 days of the number.
Yeah, 60.
What's steady state number there as well?
So on the debt, we think we have some more capex to be done, for the chipboard plant. So debt might go up another, plus minus maybe like a 4-5%, like a 50-60 crores before it starts reducing. And from FY26, the sense is start kind of reducing once all these projects come into play. On the working capital side, we are now at about last quarter, we were at about 59 days. So let's say we are at 60 days. I think on working capital too, because three new plants have started over the last 2 financial years. So a lot of our data numbers are not showing, are yet not showing the right picture of the performance of the company. I think when all these projects kind of stabilize to a certain extent, we get to a certain size and scale, we think they should also gradually improve. I think that's what we think about the working capital, because the debtors days is pretty strong, I believe. And this debtors days also considering the fact that 45-50% of our overall revenues exports, and in the exports market we have a Red Sea problem, and there are delayed shipment, containers still not reaching on time, which has improved since September. So lots of what you see, is in a situation where on one front we have changes on the export business, which is showing a larger debtors turnaround or larger inventory in pipeline. We've had the plywood factory and the Andhra Pradesh plant, which was commissioned last year in FY24. So those operating costs and interest depreciation higher. The year before we had the Gujarat plant. So I think once we pull in a bit more numbers, I think all the data, will kind of look much better, I think.
Fair point, Saurabh. Thank you so much for joining in, sharing with us your views on the quarter gone by. Wish you good luck for the second half and for FY26 as
Thank
well.
you so much.
And festive greetings to you too. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned. Welcome back. Almost in the green now is the Nifty, and the Nifty Bank too is back above levels of 52,000 as we draw curtains on this October series for the Nifty Bank. But some small patakas, the chota patakas that Mangalam was highlighting at the start of the show, Force Motors is locked in an upper circuit of 20% after its results yesterday. There are very strong earnings that came in from Force Motors, 20% higher on the stock at 7,660. The other one that I wanted to highlight though is Ola Electric. That has seen a rebound in today's trading session after it slipped below its IPO price in yesterday's trading session. 157 was the post-listing peak, made a low of around 74 yesterday, seeing a bit of a rebound in today's trading session. And another one that I wanted to mention among the stocks is Cipla. That has fallen to a 5-month low after its results and is among the top losers on the Nifty in today's trading session, while the Nifty index is making an attempt at rebound, but the shares of Cipla still remain at the lowest point of the day. Keep an eye out for earnings today. L&T is going to report results, as is Dabur, which will be out anytime now. Time for a short break. On the other side, on our commodity segment, Manisha Gupta joins in with Surendra Mehta, the Secretary of the India Bullion and Jewellers Association. Stay tuned.
Welcome back, and joining us on the show now is Mr. Surendra Mehta. He's Secretary, India Bullion Jewellers and Association. Mr. Mehta, hi, happy festivities to you. And, the first question that everybody wants to get an answer to is on how much gold was sold yesterday across India. I know this is still early days and you still must be counting, but is there an approximate number that has come across?
First of all, Manisha, Happy New Year to you and all your viewers. Happy Diwali. Manisha, what a fantastic year 2024 had been for all the investors who have invested in whether in gold, whether in silver, whether in equities. The gold has given almost 32% return. Silver has given almost 40% return in last 1 year. And even Nifty has given 28% return. So that is phenomenal number. If you look at the other investment avenues, which hardly gives you 5 to 7% or 8% return, the investment in the equities and commodity has been a wise decision in 2024. As far as the numbers are concerned for sale during Dhanteras, I think we have almost reached to a conclusion that the gold sale dropped almost 15% in comparison to the last year. Last year we sold about 42 tons, but this year we sold about 35 to 36 tons. That is volume wise, but value wise, yes, the gold sale has overall increased because there was a price rise by almost 30%.
So you're saying 35 tons this year versus 40 to 42 tons in the previous year is what gold has done. Do you would you also have silver numbers in hand?
Silver number, it is we have not been able to generate silver number as yet, but let me tell you, we had seen one interesting trend this year, that the silver sale has increased substantially in comparison to last year, and this increase is as good as between 28% to 33%. Now this is amazing number, and I think it matches to what all the analysts have been saying about silver. And we have seen a growth in the rural area also as far as purchase of silver is concerned. Of course, in the urban cities like Mumbai and all, the long queues were seen for buying silver coins. So, but one more interesting trend, that people are moving more towards the investment than towards the jewelry. So I'm not saying there was no sale of jewelry, but what I'm trying to say, if last year the investment demand was 30% for gold and silver, this year investment demand has increased by almost 10% in both the segment.
All right, Mr. Mehta, you are music to ears right now with all those numbers that you were telling us. Do talk to us about the prices part as well, and you do track those numbers quite closely. We've seen huge, immense gains, and this is an all-time high for gold and silver that we are saying in a week that has Dhanteras and Diwali. But if people are buying and the kind of buying that they are doing in tons, what's your sense on where are we headed in sense of prices by next Dhanteras and Diwali?
Well, the prices have gone so much high that it has surpassed my target of $2,750, $2,700 almost a week back. But to say that what can be the price by the next Dhanteras, I think $3,050 for the gold would be in the international market would be my target for the next Dhanteras. If we calculate in Indian terms, it would be somewhere between 87,000 to 89,000. I'm not very bullish on gold for the next 1 year, but I'm extremely bullish on silver. The silver prices can almost go 50% higher, 40 to 50% higher from the current level, looking towards the trend in the silver industry, its usage in the silver industry, and the shortage which has been accumulating for years together.
And that would mean that 40 and 50% of a rise from here would mean 1,40,000, 1,50,000, those kind of levels?
Yes, absolutely. And let me tell you, the way the silver market is going, because we are closely monitoring, we have also formed World Silver Council in India for this, and the majority of silver players have started taking a lot of interest suddenly in the in this council. I think I personally feel that the shortage of silver cannot be ruled out, the way its usage in electronic gadgets, EV vehicles, and other industrial product. So I think silver is going to be a great time for the silver investors in the next 1 year.
Mr. Mehta, also talk to us about the sense that people are buying it within. As you said, it's more of an investment right now. So clearly bars and coins are doing great, not so much as in sense of jewelry. But the other thing also is about ETFs, which have seen a very strong net inflow come in the last 3 or 4 months. We don't have sovereign bonds anymore, but the gold funds, funds of funds that most of the mutual funds as companies seem to be launching are all doing very well. So would you say that, with digital gold, with ETFs, and with the way the people are buying, that also seems to be evolving in some sense?
Absolutely. In fact, we are seeing the new breed of investors who are now converting from an equity to the commodities, and especially when the big multinational and big Indian companies come in the digital gold arena, then definitely it would generate a lot of interest amongst the common people. digital gold ETF after the tax reduction in ETF from 20% to 12.5% in the current budget. There has been shift in the ETF interest also. People are taking more interest in ETF. But let me tell you, I'm very sure that government will bring the sovereign gold bond also.
All right, Mr. Mehta, thank you so much for sparing time and joining us on the show this afternoon. Some very important numbers. Festive greetings to you as well. Manisha, thank you so much for joining in as well. With that, it's a wrap on this edition of Halftime Report. Business Lunch takes the action forward.